You've been lied to, not by a person, not by a company, but by the very structure of the world you move through every day. The financial rules drilled into you from childhood, reinforced by society, schools, and the endless scroll of social media, are nothing more than distractions, designed to keep you busy, anxious, and dependent. They want you to chase visibility, status, and recognition because that is controllable, predictable, and ultimately profitable for everyone but you. This is the trap. Most people assume wealth is earned through effort alone, hard work, long hours, degrees, the perfect career ladder. That is an illusion. Think of money like energy in a closed system. It does not magically appear. It flows, accumulates, and compounds according to laws that are invisible to most. And here's the first truth. Few will tell you, mastering this flow requires more than knowledge. It requires behavioral mastery, cognitive awareness, and strategic patience. Most people never see the architecture behind their financial outcomes. They react, they spend, they borrow, they chase. Silent winners? They see the system, and then they bend it. Imagine a river. Water rushes down a valley, carving a path over centuries, shaping the terrain. Now imagine trying to stop it with a bucket. Pointless. That is what trying to control your finances the conventional way feels like. Silent winners, however, build channels. They redirect energy. They harness momentum. They don't fight the river. They redirect it. And by understanding the invisible forces, social pressure, cognitive bias, and behavioral inertia, they make money an instrument of compounding influence, not fleeting gratification. Here's the second shock. Most financial advice you consume is designed to make you feel guilty, inadequate, or behind. Save more, spend less, work harder, hustle. Do any of these commands make you wealthy? Rarely. They cultivate anxiety. They obscure systemic opportunity. Silent winners operate with a different set of mental models. They recognize patterns in wealth accumulation, but more importantly, they recognize patterns in human behavior, your own behavior, society's behavior, and the unseen feedback loops that govern economic mobility. This is where most people hit a wall without even realizing it. Effort without alignment is noise. Efficiency without strategy is wasted energy. And visibility without privacy is vulnerability. What you've felt it. This quiet stress, gnawing in the back of your mind. The worry that your work isn't translating into security. The anxiety about keeping up. About lifestyle creep. About the friends, the family, the neighbors whose lives appear more polished, more complete. That's no coincidence. Our attention is engineered to magnify scarcity and comparison, to make you reactive instead of proactive. Silent winners experience the same social pressures, but they manage them internally. They treat scarcity as a signal, not a verdict. They treat envy as a compass, not a trap. Now let's add biology to the equation. The human brain is wired to seek immediate rewards, to respond to dopamine spikes, to default to social proof. Shopping, investing impulsively, comparing your lifestyle, chasing a promotion or viral recognition. All of these are behaviors rooted in survival mechanisms that served our ancestors but are exploited in modern capitalism. Silent winners don't suppress this wiring. They hack it. They create environments where their instincts are allies rather than adversaries. And here is the uncomfortable truth. If you don't learn to do the same, no amount of income will change your trajectory. Your wealth will always be under siege by the very mind that earned it. Economics, psychology, and strategy converge here. Silent winners understand this invisible system. Money is not a scorecard of effort. It is a feedback mechanism of alignment. timing, and leverage. Effort without system is noise. Attention without strategy is vulnerability. Every dollar wasted, every emotional decision made, every moment of comparison is energy lost from the compounding machine that could have been building exponential advantage. They think in decades, while everyone else thinks in days. They plan in layers, while most react to headlines. They act in silence, but their results echo loudly. Here's what's coming. Something almost nobody will teach you. 7 life lessons that silent winners follow religiously. Not hints, not tips, not generic advice, but the structural principles that govern every strategic move, every risk assessment, every compounding decision. Break these lessons, and you stay average. Honor them, and the system bends in your favor. You are standing at the edge of an invisible precipice. One misstep, and you fall into the chaos of reactive living. One insight, and you begin to move through the world with leverage few will ever see. By the end of this journey, you will understand why wealth is less about money and more about architecture. Why visibility kills, why patience compounds, and why the silent rules are louder than any headline. But before we reveal the first lesson, before the architecture becomes clear, you must unlearn what you think you know about money. You must acknowledge the quiet anxiety that has followed you through jobs, promotions, and paychecks, and you must be willing to see the invisible forces at play. Because what comes next is not about trying harder, it's about thinking differently. And this changes everything. The system is invisible, the rules are unspoken, and the stakes are real. Are you ready to see what silent winners see? The world of money is not what you think it is. Most people operate under the illusion that their financial outcomes are a reflection of effort, discipline, or luck. They imagine that working harder, saving more, or following proven steps is enough. This is comforting, but false. The truth is hidden in the architecture of financial systems, the invisible scaffolding that shapes results before you even act. Silent winners have discovered it, and understanding it is your first cognitive shift. Think of the economy as a vast, layered ecosystem. Every individual, corporation, and market functions like an organism responding to feedback loops. Energy flows where incentives are aligned, capital accumulates where leverage is applied, and entropy, the natural decay of poorly allocated effort, claims the unprepared. Most people throw themselves into this system blindly, like seeds scattered on concrete, expecting growth. Silent winners? They read the terrain. They map the channels of opportunity. They plant with precision. Here's the core principle. Wealth is fundamentally structural. It is not a scorecard of effort. It is a byproduct of positioning within the system. And this positioning has 3 dimensions: temporal, psychological, and relational. Temporal positioning is about recognizing the power of compounding over decades rather than months. Psychological positioning is about mastering impulses, emotional triggers, and behavioral patterns. Relational positioning is about networks, access, and the leverage inherent in connections. Break any one of these, and the system punishes you quietly but relentlessly. Most people internalize failure. They believe, I must be doing something wrong. If only I were smarter, more disciplined, luckier. Silent winners remove shame from the equation. They understand that structural misalignment, not personal inadequacy, is the silent killer. When you grasp that the system itself is designed to reward certain behaviors and punish others, regardless of intent, you stop feeling powerless and start thinking strategically. This is why shame is irrelevant. It is emotional noise that obscures structural clarity. Let's examine a pattern. Few notice the compounding trap. A young professional spends 70% of income on consumption, while their peers invest 30%. Over 10 years, even if both earn the same salary, their outcomes diverge exponentially. It's not linear. Small differences in allocation, timing, and leverage multiply. Silent winners exploit this. They understand that early discipline, even when invisible socially, compounds faster than visible effort. The crowd laughs today, but pays later, often decades later. Here's another layer: opportunity asymmetry. Society presents a seemingly level playing field, yet the truth is there are thresholds. Access to certain financial instruments, private deals, or high-yield knowledge is gated. Silent winners don't chase every opportunity. They position themselves to enter opportunities where others cannot, quietly building structural advantage. They recognize that failing to act on the right asymmetry costs far more than failing at an obvious, crowded, safe opportunity. Now, consider behavioral friction. Every time you make an impulse purchase, respond to social pressure, or give in to status anxiety, so you're introducing drag into your financial system. Most advice fails here because it focuses on do more rather than optimize the flow. Silent winners understand friction costs. They remove it, often invisibly, creating a smooth channel where energy, money, attention, time flows into compounding advantage. This is your first cognitive shift. Money is not earned. It is directed. Effort is irrelevant if misaligned. Discipline without structural awareness is wasted energy. Visibility is a liability when it exposes you to social pressure or envy. Most people operate in reactive mode, creating turbulence for themselves. Silent winners operate in proactive alignment, building invisible scaffolding around every decision. And here is the paradox. The actions that feel invisible, almost imperceptible, are the ones that ultimately produce explosive, durable outcomes. But there's more. Most financial advice emphasizes linear control. Earn more, spend less, save more, invest now. Silent winners think in vectors, not absolutes. They recognize that momentum, timing, and compounding create leverage that dwarfs linear input. And the first invisible lesson they follow is this: understand the system before participating. Every misaligned move, every impulsive buy, every status-driven investment, every reaction to social signals is a point of energy lost. And energy lost is opportunity lost, often irrecoverably. Here's a tension-building thought. The system rewards patience, invisibility, and asymmetry. Yet you've been trained to crave visibility, instant feedback, and approval. The gap between what society encourages and what reality rewards is enormous. Silent winners occupy that gap strategically, quietly exploiting it, while the majority suffer anxiety and stagnation. This is why most people never escape, even intelligent, hardworking, disciplined people. They are misaligned structurally, emotionally, and cognitively. And now, here's your micro cliffhanger. In the next segment, you will uncover the first behavioral trap that silently erodes financial advantage for nearly everyone who believes they are doing everything right. It is hidden in plain sight, disguised as normalcy, and it controls outcomes more than income, effort, or intelligence ever will. The first behavioral trap is subtle, insidious, and almost everyone falls into it without awareness: emotional misalignment with money. Most people believe that financial success is simply a matter of earning more or saving more, but they fail to see how their emotions sabotage the very flow they seek to control. Each impulse, each reaction to social cues, Each unexamined habit adds friction, silently bleeding potential into entropy. Silent winners understand that mastery begins with the mind. Consider the psychology behind spending. When we buy not from need, but from envy, status signaling, or instant gratification, we are not merely losing money, we are misallocating attention, focus, and energy. Money, at its core, is stored potential. When you redirect that potential toward immediate emotional relief rather than strategic accumulation, you erode the foundation of leverage. A single impulsive purchase may seem negligible, but over a lifetime, yet these small leaks create enormous divergence in financial outcomes. Now imagine this on a systemic scale. A household follows every conventional rule: budgeting, saving, some investments, minimal debt. Yet they react emotionally to every market fluctuation, every social comparison, every must-have product. The result? Their energy is scattered, opportunities are missed, stress compounds faster than interest ever could. Silent winners anticipate these pressure points. They design buffers, both structural and psychological, that neutralize emotional disruption before it can impact decision-making. Here's a principle many fail to grasp. Your financial system is only as strong as your weakest psychological link. Cognitive biases like loss aversion, status anxiety, and scarcity perception act like hidden drains. Even with sufficient capital, misalignment in these areas produces suboptimal outcomes. Silent winners don't rely on willpower. They engineer environments, routines, and feedback loops that make irrational behavior difficult and rational action almost automatic. Consider social proof. Humans are wired to emulate, conform, and seek approval. This trait once enhanced survival, but in modern economic systems, it creates enormous hidden costs. Seeing peers invest in flashy assets, take unnecessary risks, or inflate lifestyles triggers mimicry. Most people respond unconsciously, believing conformity is safety. Silent winners, however, recognize social cues as data points, not commands. They observe, filter, and act only when alignment exists between opportunity and their structural plan. Timing is another invisible lever. Silent winners exploit periods when the system favors alignment, market inefficiencies, knowledge asymmetry, or behavioral panic among the majority. They do not chase trends. They position themselves for strategic entry. And here is the crucial psychological insight. Patience is not passivity. It is the deliberate withholding of action until leverage is maximized. Most people mistake patience for stagnation and panic, undermining long-term compounding advantages. Let's examine another layer: the illusion of linear control. People believe that tracking every expense, calculating every investment return, or executing rigid plans ensures safety. In reality, wealth accumulation is nonlinear. Outcomes compound, diverge, and escalate based on system alignment and behavioral discipline. Silent winners embrace this reality. They accept that linear effort is insufficient and instead focus on variables that magnify leverage: timing, asymmetry, capital allocation, and friction reduction. And yet, even with awareness, emotional misalignment can persist if not consciously addressed. This is where identity begins to matter. Silent winners do not merely act differently. They think differently about money. They internalize that money is a tool, a representation of energy, and a signal of alignment. Status, comparison, and ego become distractions rather than motivators. This mental reframing allows them to navigate opportunities invisibly, capturing compounding advantage while avoiding the noise that derails most people. Now consider decision fatigue, a hidden economic force. Every unexamined choice, buying, spending, comparing, worrying, taxes cognitive bandwidth. The majority fail because their mental energy is constantly depleted by reactive decisions. Silent winners automate, delegate, and pre-commit. They understand that the system rewards clarity, foresight, and structure more than raw intelligence or effort. In other words, the architecture of your attention is as important as the architecture of your capital. Finally, the bridge to your next revelation. The first cognitive shift. The understanding that invisible structure, emotional alignment, and system leverage are inseparable prepares you for the next module, where we will dissect the behavioral finance traps that silently erode financial potential for everyone except the strategically aware. You'll see why identity, impulse, and social pressure control outcomes far more than income ever could, and how to begin reclaiming control. Here's the cliffhanger. The next lesson will reveal the hidden enemy inside your own financial behaviors, disguised as normality, trusted routines, and cultural wisdom. Recognizing it is essential before you can ever create lasting structural advantage. Miss it, and everything you've built could unravel quietly, without warning. The first secret that silent winners exploit, and most people ignore, is that behavioral traps dictate far more about financial outcomes than raw income or intelligence ever will. We are wired with predictable patterns, biases, and impulses, and the modern financial ecosystem is designed to exploit them. Emotional spending, status signaling, and identity-based self-sabotage are not anomalies. They are the default. If you don't see them, you're already losing. Consider the classic example of lifestyle inflation. A person gets a raise, celebrates by upgrading their car, paying more for rent, dining out more often. To the outside world, this seems like rational behavior. They're treating themselves. But from a structural perspective, every dollar spent on consumption rather than leverage is a dollar removed from compounding. And here's the psychological trap. Pleasure is immediate, but the cost is delayed. That delay obscures the consequence, allowing short-term satisfaction to quietly erode long-term freedom. Silent winners know this. They exploit pleasure strategically, timing it to maximize leverage rather than indulging impulsively. Now, layer in social comparison. Humans are social creatures. Our brains are wired to measure success against peers. Instagram feeds, peer conversations, even family gatherings become minefields of status signals. Each signal triggers desire, anxiety, or envy, which leads to spending, borrowing, or risky behavior. This is not trivial. It is systemic. It controls capital allocation and diverts energy away from compounding advantage. Silent winners recognize social pressure as data, not directive. They parse it, filter it, and act selectively, preserving both focus and resources. Next comes the illusion of control, a trap disguised as financial responsibility. Most people believe budgeting spreadsheets, monthly tracking, and rigid rules create security. They do, but only superficially. In reality, emotional triggers often override logic. A perfectly planned budget cannot prevent a purchase made in reaction to social cues or emotional spikes. Silent winners don't rely on willpower alone. They engineer their environments to minimize triggers. They remove temptation, pre-commit to decisions, and build psychological friction against poor choices. This is why environment design is far more powerful than effort. Let's examine identity-based financial self-sabotage. Many fail not because of a lack of knowledge or resources, but because their financial decisions clash with their perceived identity. A person sees themselves as generous, adventurous, or deserving of reward, and their spending follows suit, even when it undermines strategic goals. Silent winners decouple identity from impulse. They define their identity around leverage, alignment, and patience. When you act in harmony with this internal framework, the system begins to favor you. When you act against it, the friction multiplies, and even high income cannot save you. Behavioral finance also highlights loss aversion, the tendency to fear losses more than value gains. This drives irrational selling, panic investing, or avoidance of opportunities. Most investors sell in fear during downturns and buy in greed during bubbles, guaranteeing suboptimal results. Silent winners exploit the crowd's emotional volatility. They buy when others panic and sell when others indulge in fear-driven scarcity. They understand that human psychology amplifies market inefficiency, and aligning action with this principle multiplies advantage over time. Another hidden trap is status illusion. The loudest displays of wealth often belong to those with the least structural advantage. Flashy consumption signals perceived success, but conceals vulnerability. Silent winners operate invisibly, compounding wealth while the crowd chases visibility. Their advantage lies in subtlety. The majority is distracted by what they see, while the structurally aligned are quietly consolidating. This is a pattern repeated across generations. You do not need to look rich to become rich. You need to act in alignment with structural principles. The psychological cycle of fear, clarity, and power is critical here. Fear arises from comparison, scarcity, or social pressure. Clarity comes when you recognize the structural forces at work, the invisible rules, the asymmetries, the leverage points. Power emerges when your actions are aligned with these forces rather than reactive to them. Most people never escape fear because they never reach clarity. They are trapped in reactive cycles, that making every financial move a casualty of emotional bias. Silent winners break this cycle intentionally. Here's the micro cliffhanger. Next, you'll see how emotional misalignment compounds into a numeric disadvantage. We will break down behavioral traps into measurable impact, revealing exactly how status, impulse, and bias erode long-term capital. Once you see it numerically, the cost becomes undeniable, and the invisible system begins to reveal itself in stark, undeniable terms. To truly grasp why behavioral traps are devastating, we must translate emotion into numbers. Silent winners understand that the abstract consequences of impulse, status, and misalignment are real, measurable, and exponentially destructive over time. I consider this. A person earns $80,000 a year and increases spending by just 5% annually to match perceived social expectations. Over 20 years, the difference between disciplined allocation and reactive consumption is not linear. It is compounding. That seemingly small 5% erosion translates into hundreds of thousands, even millions of dollars lost in potential leverage. And that's just one variable. Let's quantify emotional spending. Suppose someone spends $200 impulsively each week. Small, normal indulgences. That totals $10,400 annually. Invested at a conservative 8% annual return in 20 years, that $10,400 per year could have grown to over $400,000. One casual emotional purchase per week, comfort, status, or reaction to social cues, erodes long-term wealth dramatically. Silent winners don't make this mistake. They understand the invisible cost of friction. Every action has a numeric consequence, and every misalignment compounds silently, invisibly, relentlessly. Next, consider status-based self-sabotage. Upgrading lifestyles, borrowing to keep up, or chasing high-visibility experiences may feel rewarding now, but structurally, it is catastrophic. For example, inflating your annual consumption by $15,000 above strategic allocation over 15 years, while earning the same income, can result in a net divergence exceeding $500,000 due to lost compounding. Emotional gratification masquerades as security or status, while in reality, it is a silent tax on future freedom. Silent winners calculate this psychological tax intuitively. They internalize. Pleasure today has a deferred cost tomorrow. Loss aversion intensifies the damage. The people fear taking calculated risks to capture structural advantage. They hold cash while markets dip, sell in panic when prices fall, or avoid investment opportunities due to emotional uncertainty. Statistically, this behavior ensures underperformance. Even slight deviations from rational, system-aligned behavior reduce long-term gains significantly. Silent winners leverage these tendencies. They act when others hesitate, buy when others fear, and position themselves to capture asymmetric upside. This is not luck. It is the disciplined exploitation of behavioral predictability. Behavioral traps extend to cognitive fatigue. Every unplanned decision drains mental bandwidth. Studies in behavioral economics show that decision fatigue increases susceptibility to impulse, status-driven spending, and risk-averse errors. The more reactive you are, the more your system becomes misaligned. Silent winners recognize that attention is capital, just like money. They automate, pre-commit, and engineer their environments to reduce unnecessary cognitive load, ensuring that when real opportunities appear, their minds are free to act decisively. Identity-based sabotage compounds numerically as well. Consider a person who self-identifies as generous, adventurous, or deserving of reward, and consistently overspends by $500 monthly to satisfy this identity. Over 10 years, at a conservative 6% investment return, that misalignment costs roughly $100,000 in lost capital growth. Here's the crucial point. Income alone cannot compensate. Even substantial earnings cannot offset compounding behavioral leakage. Silent winners do not fight identity. They reframe it. So their internal narrative aligns with leverage, patience, and compounding, converting potential energy into structural advantage rather than depletion. Social comparison is another measurable trap. Suppose a peer group normalizes $2,000 per month in discretionary spending. Following the same behavior, despite similar income, ensures the average participant systematically sacrifices long-term wealth. Silent winners observe these cues as signals rather than commands. They filter noise and maintain disciplined allocation, compounding advantage quietly while others erode theirs chasing perception. Over decades, the numeric divergence becomes extreme, a difference of millions, hidden in plain sight. Here's the psychological revelation. The system is merciless but predictable. Emotional spending, identity misalignment, status chasing, and reactive decision-making all create numeric consequences that magnify exponentially over time. Most people never quantify this because their attention is captured by immediate gratification, social cues, or short-term anxiety. Silent winners quantify everything intuitively. Every decision is assessed not by emotion, but by structural impact, opportunity cost, and compounding potential. And here's the cliffhanger to pull you into the next section. Now that we've exposed the behavioral traps and mapped them numerically, the next module will dissect mathematical compounding frameworks and wealth velocity. You will see exactly how capital thresholds, timing, and disciplined leverage create outcomes that appear almost magical to outsiders, but are entirely predictable when the system is understood. This is where theory becomes action, and invisible advantage transforms into tangible, measurable acceleration. Now that we've exposed the invisible behavioral traps and quantified their silent toll, it's time to move from theory to mathematics. Silent winners understand that money is not just a medium of exchange. It is a velocity engine, a compounding machine, and a signal amplifier. Without understanding the math of compounding, leverage, and threshold effects, even disciplined behavior remains flat, trapped in linear outcomes while the system favors exponential thinkers. Consider compounding not just as interest, but as a multi-layered mechanism of advantage. Every dollar, every skill, every connection can generate returns, financial, social, or cognitive, if structured correctly. The difference between linear accumulation and compounding acceleration is staggering. For instance, investing $1,000 per month at 8% over 30 years yields roughly $1.2 million. But if that same individual leverages asymmetry, timing opportunities, reinvesting returns, and minimizing friction, the same input can generate multiples of that output. Silent winners think not in months, but in decades. They layer compounding into every dimension of life. Let's introduce wealth velocity. This is the rate at which capital generates new opportunities and feeds back into the system. Most people confuse income with velocity. Earning $100,000 a year is meaningless if the money flows out faster than it compounds. Velocity depends on allocation, leverage, and structural awareness. Silent winners engineer environments where every dollar, skill, and decision accelerates further capital creation. Your money begins to work for them instead of the other way around. Velocity is invisible but measurable. It is the core differentiator between silent winners and perpetual strivers. Capital thresholds create the next layer of insight. The system does not reward everyone equally at all levels. There are critical thresholds where compounding and leverage kick in disproportionately. For example, crossing a threshold of $50,000 in investable capital allows access to higher yield instruments that were previously unavailable. Reaching $250,000 opens private deals or venture opportunities. Each threshold is a structural multiplier. Missing one means years of delayed compounding. Silent winners identify these thresholds early and design their actions to reach them efficiently. The crowd, distracted by lifestyle or visibility, often never notices these leverage points until it's too late. Now, consider escalation examples. A young investor starts with $10,000, adding $500 monthly at 7% annual return. After 10 years, that capital grows to approximately $100,000. But the same investor who optimizes leverage, reduces behavioral friction, and reinvests returns at key timing windows might reach $200,000 in the same period. Slight differences in timing, allocation, and system understanding create enormous divergences. Silent winners exploit these tiny gaps repeatedly, quietly compounding advantage while the majority stagnates. Here's where numbers meet psychology. Many believe more income equals more wealth. But without understanding thresholds and velocity, income is just friction. Yet silent winners focus less on total dollars earned and more on how each dollar can generate new opportunities. Skills, relationships, and capital are deployed into exponential loops, creating outcomes that seem disproportionate to input. This is why people with modest earnings sometimes outpace high earners. The system rewards leverage, alignment, and velocity over raw effort. Let's examine risk-adjusted compounding. Silent winners understand that reckless risk is destructive, but measured risk, aligned with structural advantage, amplifies results. Consider a $50,000 investment opportunity. One person avoids it entirely out of fear, while a silent winner evaluates the upside, mitigates downside, and enters with a calculated position. Over time, repeated strategic entries compound results far faster than high-income accumulation alone. Risk, when controlled, becomes a multiplier. When emotional, it becomes a drain. Wealth escalation is not just about money. It is about time, patience, and alignment. Silent winners understand that compounding is strongest when uninterrupted. Every behavioral trap avoided, every social comparison resisted, and every impulsive expenditure redirected into strategic channels accelerates growth. Over decades, these invisible choices create exponential divergence. The crowd sees only the results. They never perceive the invisible architecture that produced them. Here's your micro cliffhanger. In the next part, we'll break down capital thresholds with numeric modeling, showing exactly how minor adjustments in timing, leverage, and compounding dramatically accelerate wealth growth. You'll see why even small behavioral misalignments can derail decades of effort, and why silent winners operate with almost surgical precision in their capital deployment. The system, invisible to most, will reveal itself in stark, measurable clarity. Let's get precise with capital thresholds and numeric modeling. Silent winners view each dollar not as cash, but as potential energy, and its impact multiplies once it crosses structural thresholds. Consider this scenario. An investor accumulates $50,000. At this level, traditional brokerage accounts allow access to higher-yield mutual funds and diversified portfolios. If the investor had remained at $10,000, the same returns would be unreachable. The threshold unlocks asymmetrical opportunities. The math is simple yet powerful. A 7% annual return on $50,000 generates $3,500 per year, whereas on $10,000, it produces only $700. Over 20 years, compounding magnifies this difference to hundreds of thousands of dollars. Thresholds are leverage points hidden in plain sight. Silent winners identify and target them before others even notice. Now add timing windows. Capital in isolation has power, but strategic timing multiplies it. Take market cycles, for example. A person who invests steadily without consideration of systemic cycles experiences growth, but a silent winner waits for mispricing or temporary panic, allocating additional capital exactly when risk is mispriced and upside is asymmetric. This creates a velocity advantage. The same input produces far greater output. Over decades, repeated exploitation of timing windows turns modest investments into extraordinary outcomes. Escalation is exponential. If one threshold unlocks a certain level of access, multiple thresholds compound the effect. Consider layered capital deployment. $50,000 unlocks mutual fund opportunities. $100,000 allows private lending. $250,000 opens venture investments. Each successive threshold provides disproportionately higher leverage. The crowd, unaware, often overspends or underinvests, never reaching these layers. Silent winners act invisibly, quietly stacking thresholds while maintaining alignment, patience, and control. Next, let's quantify behavioral leakage against compounding advantage. Suppose an individual overspends by $500 per month due to impulse or social pressure. That is $6,000 per year. Invested at 8% over 20 years, that lost potential totals approximately $288,000. Add in delayed investment from emotional hesitation, and losses amplify further. Each behavioral misalignment carries a numeric consequence that compounds silently. Silent winners anticipate these losses, eliminating them before they manifest. This is not theoretical. It is the predictable mathematics of alignment versus misalignment. Velocity, thresholds, and compounding form a triad. Velocity ensures that capital flows continuously into productive channels. Thresholds unlock higher leverage instruments. Compounding multiplies returns over time. Break any link, and the system punishes silently but effectively. Most people fail at all three simultaneously. They earn, they spend, they panic, and they react. Silent winners maintain balance in each domain, converting predictable system dynamics into consistent advantage. Let's examine capital escalation examples numerically. So Investor A saves $500 monthly without threshold targeting, investing in a diversified fund at 7%. After 20 years, the balance reaches roughly $275,000. Investor B, who targets thresholds, leverages timing windows, and avoids behavioral leakage, invests the same $500 monthly plus strategic additions during opportunity windows. After 20 years, B's balance exceeds $450,000. Same discipline, same input, radically different output, simply by aligning behavior with structural leverage. Here's the subtle psychological layer. Even minor deviations in emotional alignment, impulsive spending, or social influence can erase entire thresholds of compounding. Missing one opportunity, succumbing to one emotional impulse, or inflating consumption to keep up might not feel significant today, but over time, it transforms into structural disadvantage. Silent winners treat these as non-negotiable. Every choice is an input. Every input is a vector toward compounding acceleration or erosion. Finally, wealth velocity is enhanced by risk-adjusted leverage. A silent winner does not chase high risk recklessly, but applies capital where asymmetric upside is high and downside is structurally mitigated. Strategic leverage turns dormant capital into exponential energy. The crowd avoids risk due to fear, allowing the structurally aware to capture outsized gains quietly, repeatedly, and predictably. Micro cliffhanger. For the next section, in Section 4, we'll explore why intelligent, disciplined, and hard-working people still fail. You'll see how social programming, lifestyle inflation, environmental pressure, and decision fatigue create invisible forces that sabotage even the most capable individuals. The system does not discriminate. It punishes misalignment, regardless of talent or effort. Silent winners understand and navigate these pressures, while the majority continues to struggle unknowingly. Even the smartest, hardest working, and most disciplined individuals often fail financially. It's a paradox that confounds observers. Intelligence and effort should correlate with wealth, but they rarely do. The reason lies not in ability, but in invisible social, environmental, and psychological forces that shape decisions long before conscious thought intervenes. Silent winners understand these forces, exploiting them strategically, while most people are trapped in invisible gravitational pull. Let's start with social programming. From childhood, we are conditioned to equate success with visibility, grades, accolades, promotions, social approval. This conditioning persists into adulthood, manifesting as the compulsion to maintain appearances, cars, homes, vacations, lifestyle markers. The danger is subtle. These markers are energy drains disguised as achievements. Money spent on external validation is capital diverted from compounding advantage. Silent winners recognize the pressure, but remain detached, choosing internal alignment over external approval. Next comes lifestyle inflation psychology. Income rises, and spending automatically follows. Few notice the silent drag this creates on wealth velocity. The math is unyielding. If your expenses scale with your income, leverage and compounding remain stagnant. The crowd believes wealth is about high income. Yet silent winners understand it is about income minus friction, compounded strategically over decades. Every incremental dollar consumed unnecessarily diminishes future options exponentially. Environmental pressure compounds the problem. Surroundings dictate behavior more than we admit. Friends, family, colleagues, and social media normalize consumption patterns, risk aversion, or impatience. Behavioral economics shows that humans unconsciously mirror the choices of peers, even when it conflicts with long-term advantage. Silent winners engineer their environments, curating associations that reinforce patience, leverage, and strategic alignment. The crowd rarely perceives this. It is invisible advantage operating quietly beneath the surface. Decision fatigue is another silent killer. Every unexamined choice, buying, spending, or reacting, erodes mental bandwidth. Humans have finite cognitive energy. As decisions accumulate, the likelihood of poor choices skyrockets. This is why even intelligent individuals make repeated mistakes. The system is structured to exploit attention depletion. Silent winners pre-commit, automate, and delegate decisions, preserving clarity for the moments that truly matter. Their energy is reserved for strategic deployment, not reactive turbulence. Consider the psychological trap of deferred regret. Most people spend today to avoid immediate dissatisfaction, believing they can catch up later. Yet deferred regret rarely materializes into action. The compounding cost of procrastination, missed thresholds, lost opportunities, and behavioral leakage accumulates silently. But silent winners internalize a different framework. They treat each dollar, hour, and decision as a vector with long-term consequence, not immediate satisfaction. The emotional cost of waiting becomes negligible compared to the structural advantage gained. Let's examine intelligence and effort paradoxically failing. Smart, hardworking individuals often believe rationality alone ensures outcomes. Yet rationality without structural alignment is powerless. One may invest diligently, but in instruments with poor compounding potential, or earn a high salary while falling prey to lifestyle inflation and social pressures. The system does not reward perceived intelligence. It rewards alignment, leverage, and invisibility. Silent winners exploit this principle, converting strategic insight into measurable advantage. Here's a structural pattern most people miss: the interaction of social programming, lifestyle inflation, and decision fatigue. Combined, they form a silent, compounding liability. Even those with abundant income see minimal net growth if these forces are unaddressed. Silent winners break this cycle consciously. They reduce friction, control visibility, and design financial and environmental buffers that shield compounding advantage from these invisible drains. Micro cliffhanger. In Section 4. Part 2. We'll explore how silent winners neutralize these pressures using psychology, structural alignment, and decision architecture to convert intelligence and effort into exponential advantage. You'll see why avoiding lifestyle inflation, managing social signals, and controlling environmental pressures are not optional. They are mandatory for structural wealth. Silent winners neutralize the invisible pressures that trap most people, and they do it with strategic precision. The first lever is visibility control. Social pressure exploits the human need for approval, but silent winners minimize exposure. They do not flaunt wealth, they do not seek applause, and they avoid comparison traps. The crowd, distracted by appearances, sacrifices compounding power, chasing recognition. Silent winners operate in silence, letting structural advantage grow invisibly while others dissipate energy on social validation. Next is lifestyle inflation management. Unlike the majority, silent winners decouple income from consumption. When salary increases, lifestyle does not automatically escalate. Instead, surplus income is strategically allocated into leverage channels, investments, skill building, networks, or asymmetric opportunities. The compounding effect of disciplined restraint is staggering. Over decades, what looks like modest restraint becomes exponential advantage. The difference is subtle in the short term, but undeniable in long-term trajectory. Environmental curation is another critical tool. Surroundings shape behavior far more than conscious effort. Silent winners select peers, mentors, and networks that reinforce patience, strategic thinking, and disciplined action. They avoid environments that normalize short-term gratification, status chasing, or impulsive behavior. Each relationship, meeting, or exposure is evaluated for its impact on long-term alignment. By controlling their environment, they reduce friction and maximize velocity without additional effort. Decision architecture amplifies this effect. Silent winners pre-commit to financial rules, automatic investments, spending limits, and structured allocations. This is not restriction, it is leverage. By automating decisions and removing opportunities for emotional deviation, they preserve cognitive bandwidth for high-leverage opportunities. Decision fatigue is minimized, and every action becomes intentional rather than reactive. The crowd, by contrast, wastes mental energy daily on trivial choices, allowing small inefficiencies to compound into substantial structural disadvantage. Behavioral buffers extend into emotional management. Silent winners train themselves to treat fear, envy, and social anxiety as signals rather than directives. Market panic, social comparison, and personal setbacks do not provoke reaction. They inform strategy. This emotional discipline ensures that capital, attention, and energy flow continuously into aligned channels, rather than dissipating under short-term pressure. The math of compounding, once aligned with behavioral discipline, begins to operate almost invisibly. Let's examine the structural mechanics of delayed gratification. Most people discount future benefit for immediate satisfaction, an error amplified by modern culture. Silent winners invert this principle. They act today with a horizon measured in decades, not months. Every decision is evaluated through long-term impact, every action timed to maximize leverage. Over time, these choices create compounding acceleration that appears almost magical to outsiders. The difference is patience aligned with system awareness, not luck. Finally, consider pressure insulation through buffers. Silent winners maintain reserves, not for panic, but for optionality. Capital, skills, and access are deployed selectively, creating the ability to act when misalignment occurs in the crowd. The average person reacts. The silent winner anticipates. Pressure, anxiety, and volatility are absorbed by system design, leaving momentum intact. This is why many high earners fail despite talent. They lack buffers, alignment, and structural foresight. Silent winners create them methodically. Micro cliffhanger. The next section, Section 5, Strategic Wealth Blueprint, will reveal the step-by-step system silent winners use to structure capital, mitigate risk, and build compounding advantage across multiple layers. You'll see exactly how they translate psychology, timing, and alignment into tangible financial architecture. The invisible becomes visible, and the roadmap to sustained, exponential wealth emerges in full clarity. Now that you understand the invisible architecture, behavioral traps, and systemic forces that silently shape financial outcomes, it's time to see how silent winners translate awareness into structure. This is the point where psychology, compounding, and environmental control converge into a step-by-step blueprint, a strategic framework that transforms potential energy into tangible, exponential advantage. The foundation of the blueprint is capital structure. Silent winners don't treat money as fungible or uniform. They divide capital into distinct channels: operating capital, opportunity reserves, your long-term growth allocations, and skill-enhancing investments. Each channel has a unique purpose, risk profile, and compounding vector. For example, operating capital ensures day-to-day freedom and frictionless execution, while opportunity reserves allow them to act decisively during asymmetric windows. Growth allocations feed compounding engines over decades, and skill investments accelerate leverage across every domain. Most people conflate all money into a single account, reducing clarity and velocity. Silent winners engineer clarity as a tool. Next is asset acquisition logic. Assets are not acquired for prestige or visibility. They are chosen for leverage, optionality, and long-term compounding. Silent winners follow a disciplined hierarchy. High liquidity investments for optionality, followed by diversified growth vehicles, less strategic real estate, and finally, asymmetric private opportunities. Each layer is evaluated for structural alignment, risk, upside potential, and time horizon. Emotional bias is removed from acquisition decisions. Unlike the majority, who chase trends or status symbols, silent winners let structural advantage dictate acquisition, not impulse. Risk mitigation structure is equally essential. Silent winners understand that leverage multiplies both gains and losses. They do not avoid risk, they control it. Strategic buffers, liquidity reserves, insurance, diversification, and optionality absorb volatility without disrupting momentum. Every high upside opportunity is evaluated against downside thresholds, ensuring that compounding engines remain intact through market swings and behavioral friction. The crowd, in contrast, often applies leverage indiscriminately, exposing themselves to catastrophic erosion of capital. Skill stacking is the next pillar. Silent winners do not rely solely on capital. They cultivate cumulative competence. Each skill enhances the return of the next, creating a self-reinforcing cycle. Finance, negotiation, market insight, cognitive discipline, and timing intuition form a lattice where leverage multiplies naturally. Skills are treated as high-return assets themselves, compounding silently over years. This is why two people with equal capital can diverge massively in outcome. Skill stacking transforms capital into amplified opportunity. Cash flow architecture is another core principle. Silent winners separate active income from passive flow, now ensuring that working capital supports lifestyle and optionality while growth engines operate independently. They invest in assets that generate recurring, compounding returns, equities, private lending, royalties, and scalable business structures. Every allocation is evaluated not for immediate reward, but for structural reinforcement of wealth velocity. Most people confuse income with leverage. Earning more does not accelerate compounding if deployment is reactive or misaligned. Finally, long-term asymmetry thinking is the invisible linchpin of this blueprint. Silent winners operate in decades, not months. They prioritize structural advantage over visibility, patience over impulse, and alignment over effort. Every decision is measured against potential asymmetry. Opportunities where small input produces disproportionate output. So they think in vectors, thresholds, and velocity, not in linear metrics of effort. This mindset transforms every dollar, skill, and relationship into a compounding engine capable of exponential growth. Micro cliffhanger. In Section 5. Part 2, we will break down each component of the blueprint into actionable steps, showing exactly how silent winners allocate capital, acquire assets, mitigate risk, and stack skills to generate compounding advantage that the majority never sees or understands. The invisible system becomes operational, and the pathway from awareness to strategic execution is revealed in full clarity. Now we operationalize the blueprint. Silent winners translate abstract principles into concrete, repeatable actions. This is where knowledge becomes leverage, and awareness transforms into measurable advantage. Step 1. Capital allocation. Every dollar is assigned a purpose before it touches your hands. Silent winners divide capital into 4 primary channels: operating capital, liquid funds for daily operations, and low-friction execution. This ensures freedom without stress. Opportunity reserve. Cash or near-cash assets set aside for asymmetric opportunities, market dips, private deals, or strategic investments. Timing windows amplify these dollars exponentially. Long-term growth capital. Allocations into compounding engines like equities, diversified funds, or real estate. Patience is non-negotiable. Compounding thrives on uninterrupted flow. Skill/leverage investments. Education, mentorship, and experience that increase future income, optionality, or compounding potential. This capital multiplies indirectly by enhancing decision-making and access. Each allocation is calculated, not guessed. The silent winner knows exactly what portion of wealth flows into each channel, ensuring no leakage or friction. Most people leave their capital unstructured, wasting cognitive bandwidth and compounding potential. Step 2. Asset acquisition logic. Assets are acquired for systemic leverage, not status. The hierarchy follows: high liquidity vehicles, savings, money market funds, short-term bonds for optionality. Growth assets, diversified equities, REITs, and long-term instruments aligned with compounding thresholds. Strategic real estate, income-generating properties, chosen for cash flow and optionality. Asymmetric private opportunities, venture investments, private deals, or niche markets where insight creates outsized advantage. Silent winners evaluate each asset through 4 lenses: risk, upside potential, timing, and alignment with structural thresholds. Emotion is irrelevant. Logic and alignment dominate. The crowd often buys on hype or visibility, paying a hidden social tax that reduces compounding and accelerates volatility. Step 3. Risk mitigation structure. Leverage is a double-edged sword. Silent winners apply it deliberately, controlling downside through diversification across uncorrelated assets, liquidity buffers to weather volatility, optionality to capture asymmetric gains, strategic insurance and hedges where necessary. The goal is continuity. Capital grows without catastrophic interruptions. Most high earners fail here. They apply leverage indiscriminately, is ignoring system rules and compounding risk. Silent winners understand. Control of downside is the multiplier of upside. Step 4. Skill stacking. Skills are the silent engines of compounding. Each skill increases leverage in other domains. Negotiation skills. Improve investment terms. Market insight enhances timing of capital deployment. Cognitive discipline reduces emotional friction. Network leverage amplifies opportunity access. Skills are treated as high return, compounding assets themselves. Unlike income, which is linear, skill stacking multiplies advantage structurally. Over decades, the effect dwarfs raw capital input, creating separation from the reactive majority. Step 5. Cash flow architecture. Active and passive streams are structured to reinforce velocity. Active income maintains operating capital and opportunity reserves. Passive income compounds independently in long-term growth channels. Reinvested returns accelerate capital thresholds. This separation ensures compounding engines remain uninterrupted, while the silent winner maintains freedom, optionality, and alignment. Most people confuse income with leverage, failing to realize that misallocated cash flow neutralizes compounding advantage. Step 6. Long-term asymmetry. Thinking every action is measured for disproportionate output relative to input. The silent winners identify moments of asymmetric opportunity. Investments where small input generates outsized returns. Skills and relationships that multiply other assets. Short-term satisfaction is irrelevant. Horizon thinking dominates. Actions today are evaluated in decades, not months. This mindset allows the invisible system to operate without interference from impulse, status, or social pressure. Micro cliffhanger. The next section, Section 6, Acceleration Phase, will reveal how silent winners deploy dual engines of income and assets, exploit optionality, and control leverage to transform decades of structural advantage into exponential growth. The blueprint evolves from static architecture into dynamic, unstoppable momentum. Now that the strategic wealth blueprint is fully established, it's time to activate the acceleration phase. This is where silent winners move from structural alignment to dynamic momentum, deploying dual engines of growth, income, and assets. Understanding how these engines interact and when to apply leverage versus restraint creates compounding velocity that the majority can barely perceive, let alone replicate. The first engine is income optimization. Silent winners approach earning not as a linear pursuit, but as a lever to fund structural advantage. Every dollar of active income is evaluated for its marginal impact on long-term compounding. For instance, a high-paying job may provide immediate capital but limited optionality, whereas strategic projects, consulting, or entrepreneurial ventures increase both income and structural leverage. Income becomes a tool to unlock thresholds and accelerate asset deployment, not a status symbol or ego booster. The second engine is asset deployment. Assets are not static. They are kinetic. Silent winners deploy them strategically into growth channels that maximize velocity. Equities during opportunity windows, private deals with asymmetric upside, and real estate that generates recurring cash flow. Assets are layered for maximum compounding, creating multiple, simultaneous streams that reinforce each other. The crowd often treats assets as passive storage, wealth for visibility rather than leverage, while silent winners engineer motion. Optionality strategy is the invisible multiplier. Every allocation is assessed for flexibility, the ability to act quickly, capture mispriced opportunities, or pivot without structural disruption. Silent winners maintain reserves, not for fear, but for freedom to exploit asymmetry. Optionality allows them to act decisively when others hesitate, turning market inefficiency, social panic, or behavioral bias into tangible advantage. Timing, patience, and optionality converge into exponential acceleration. Leverage is the next critical principle, but it is applied with precision. Silent winners distinguish between controlled leverage and leverage abuse. Controlled leverage amplifies velocity within structured risk parameters, margin in investment accounts, strategic debt for cash flow assets, or skill leverage to multiply impact. Leverage abuse occurs when emotional decision-making overrides structural discipline, often producing catastrophic erosion of capital. Silent winners understand that risk multiplied by misalignment is a silent killer. Timing windows define the phase. Silent winners are not reactive. They anticipate. They watch for periods where the system is misaligned, when crowd behavior creates gaps, and when capital thresholds can be crossed efficiently. Entering too early or too late reduces leverage. Entering at the precise inflection point creates outsized compounding. This is why patience, observation, and structural clarity are indispensable. The acceleration phase is as much psychological as it is financial. Consider the interaction of income and asset engines numerically. Suppose an individual invests $2,000 monthly from active income while deploying $50,000 in assets strategically into high-growth opportunities. Over 20 years, the careful timing and optionality could result in outcomes exceeding double those of the same total input applied passively without system awareness. This illustrates the power of synchronized engines. Income fuels optionality, assets compound, and structural advantage accelerates exponentially. The invisible principle here is friction reduction. Every decision, every dollar, and every movement is engineered to minimize behavioral drag. Emotional impulses, social pressure, or short-term distraction would otherwise neutralize acceleration. Silent winners preempt friction through automation, pre-commitment, and environment design, ensuring that every engine operates at peak efficiency. Micro cliffhanger. In Section 6, Part 2, we will examine real-world deployment strategies, showing how silent winners time market windows, optimize leverage, and orchestrate income and assets simultaneously to create exponential growth trajectories that appear almost effortless to outsiders. The system moves from static structure to unstoppable motion, and you will see exactly how velocity is activated. In this second part of the acceleration phase, we examine real-world deployment strategies that silent winners use to convert structural alignment into unstoppable momentum. The dual engines of income and assets, when synchronized with timing, leverage, and optionality, create outcomes that feel almost magical, but they are entirely predictable to those who understand the system. Strategic timing. Windows silent winners identify moments when the system is misaligned, periods of market inefficiency, social panic, or behavioral overreaction. These windows are invisible to most, but they amplify compounding exponentially for those prepared. For example, during market corrections, crowd panic drives valuations below intrinsic value. Those with optionality and disciplined capital deployment can enter precisely when the upside is asymmetric. The math is clear. A small, well-timed investment multiplies far faster than constant, unstructured contributions over the same period. Income leveraging for acceleration. Income is more than a number. It is a force multiplier. Silent winners evaluate each income source for its ability to generate optionality, fund growth capital, and unlock thresholds. Side projects, consulting, entrepreneurial ventures, or performance-based incentives are not pursued for prestige but for leverage. Active income is strategically allocated to amplify velocity, not simply spent. Many high earners fail because they consume without aligning earnings to compounding engines. Silent winners invert this principle, turning every dollar earned into structural advantage. Asset synchronization assets are not static. They must interact with income and thresholds to accelerate growth. Silent winners layer investments across uncorrelated vehicles, stocks, real estate, private deals, skill capital, timing each allocation to exploit the system. Passive investors treat assets as storage. Silent winners engineer motion. Capital moves like water through optimized channels. It flows into high-velocity opportunities when thresholds align, then returns to structural reserves for optionality. This orchestration multiplies compounding far beyond linear accumulation. Controlled leverage application. Leverage is applied with precision, never recklessly. Silent winners understand that risk is magnified by misalignment. Strategic leverage amplifies upside while buffers mitigate downside. Examples include using margin selectively in equities to capture timing windows, applying debt to cash flow positive real estate with low risk. Leveraging skill or influence to multiply deal flow. The key is structural alignment. Leverage magnifies velocity only when engines are optimized. The crowd often misuses leverage, driven by status, greed, or emotional panic, producing catastrophic erosion. Silent winners, by contrast, treat leverage as a tool, not a shortcut. Optionality management. Optionality, the freedom to act decisively, is the invisible accelerator. Every dollar, every skill, and every relationship is evaluated for flexibility. Maintaining liquidity, reserves, and unallocated capital allows silent winners to exploit opportunities instantly, while the majority hesitates or reacts too late. Optionality transforms timing windows into exponential advantage. Behavioral friction. Reduction acceleration is not purely financial, it is deeply psychological. Emotional impulses, social comparison, and short-term anxiety are friction that slows compounding. Silent winners automate decisions, pre-commit to allocation structures, and engineer environments to minimize distraction. Their engines operate at peak efficiency, while the crowd's progress is continually eroded by unnoticed, cumulative behavioral leakage. Here's a real-world illustration. A silent winner earns $150,000 annually and allocates $2,500 monthly to growth assets while maintaining $50,000 in reserves for optionality. Over 15 years, disciplined timing, controlled leverage, and threshold-based deployment produce outcomes exceeding $1.2 million, compared to a reactive peer with identical income and contributions who only reaches $700,000. The difference is velocity, not income. Structural alignment in motion. Micro cliffhanger in Section 7. Identity evolution. We will explore the psychological transformation that enables this acceleration to continue over decades. You'll see how silent winners rewire their identity, internalize delayed gratification, and detach from short-term validation to maintain exponential growth long after others plateau. The invisible system is no longer theoretical. It becomes an enduring engine of compounding advantage. The acceleration phase delivers results, but without identity evolution, momentum eventually plateaus. Silent winners understand that financial structures, compounding engines, and strategic timing are only effective when the internal architecture, their psychology, self-concept, and decision-making framework, is fully aligned. This section explores how the silent winner's identity is rewired, enabling them to sustain exponential growth over decades while the majority stalls under familiar pressures. The first principle is internalizing delayed gratification. Most people live on a feedback loop of immediate satisfaction, trading long-term potential for short-term relief. Silent winners invert this paradigm. They cultivate a mindset where future value is weighted exponentially more than present comfort. Every decision, from spending to skill building, is evaluated against long-term alignment rather than fleeting pleasure. Over time, this rewiring becomes automatic. Impulses that derail the average person are met with calm, structural assessment. Next is strategic detachment from external validation. Social comparison, peer approval, and status cues are the invisible levers that derail wealth velocity. Silent winners maintain distance from these pressures. They observe society's signals not as imperatives, but as data, choosing engagement selectively and intentionally. This detachment is not apathy, it is strategic clarity. It preserves energy, prevents behavioral leakage, and ensures decisions are based on alignment with compounding advantage rather than social expectation. Thinking in decades, not months, is the third transformation. The silent winner's time horizon is vast, and every action is measured for long-term asymmetry. Income, investment, and skill acquisition are layered with decades in mind. The compounding advantage of early alignment becomes clearer with each passing year. Most people think linearly: a raise, a bonus, or a short-term investment. Silent winners structure decisions as vectors. Capital, skill, and relationships converge across decades to produce outcomes that appear disproportionate but are mathematically inevitable when aligned with structural advantage. Behavioral identity alignment is the next layer. The silent winner does not merely act differently, they see themselves differently. Self-perception shifts from reactive consumer to structural optimizer. Spending, risk-taking, and effort all reinforce identity rather than undermine it. This internal consistency creates a feedback loop. Aligned identity reduces cognitive friction, increases discipline, and magnifies compounding returns. It is a subtle transformation, but profoundly powerful. Identity now drives action rather than vice versa. Emotional resilience as structural leverage is also critical. Fear, envy, and doubt are no longer triggers. They are information. Silent winners treat market corrections, social pressure, and personal setbacks as signals to assess structural opportunity. Emotional energy is conserved for decisions with leverage potential rather than dissipated on reactive impulses. This rewiring transforms psychology into a compounding engine. Internal equilibrium reinforces external velocity. Consider skill reinforcement through identity. Every acquired skill is now integrated into self-concept. Negotiation, market insight, financial discipline, and timing intuition are no longer learned tools. They are intrinsic aspects of identity. This alignment ensures that every decision, whether conscious or automatic, reinforces compounding advantage. The silent winner doesn't apply a skill. They embody it, producing consistent behavior that magnifies results invisibly over time. Micro cliffhanger. In Section 7, Part 2, we will explore how silent winners systematically detach from short-term pressures, internalize structural patience, and amplify exponential compounding through identity engineering, creating a feedback loop that sustains acceleration indefinitely. You'll see why psychology, not capital alone, is the ultimate differentiator in long-term financial dominance. Building on internal alignment, silent winners cultivate systematic detachment from short-term pressures. Whereas most people react to daily market news, peer comparisons, or temporary social validation, silent winners treat these stimuli as signals rather than imperatives. Emotional responses are filtered through a framework. Does this decision advance compounding advantage, optionality, or threshold progression? Anything outside that scope is ignored, deferred, or strategically avoided. This detachment is not avoidance, it is precision focus. The next layer is reinforcing patience structurally. Patience is not simply waiting, It is engineered into daily action. Automated investments, pre-committed allocations, and strategic cash flow systems ensure that compounding proceeds without emotional interference. Every potential impulse to spend, divert, or react is neutralized before it impacts structural velocity. Silent winners internalize this. The system works invisibly while others oscillate between reaction and frustration, reducing momentum. Identity as a compounding engine is paramount. Silent winners integrate behavior, self-perception, and long-term objectives into a cohesive mental architecture. Their decisions are consistent with this identity, making misalignment psychologically uncomfortable. This creates a self-reinforcing loop. Aligned identity produces disciplined action. Disciplined action strengthens identity, and both compound over time. The psychological leverage gained here exceeds any single financial instrument, yet it remains invisible to outsiders. Delayed gratification becomes a structural habit. Silent winners treat deferred rewards as the primary driver of compounding advantage. Where the average person sees sacrifice, the silent winner sees leverage. A small action today produces disproportionate results decades later. Every decision is evaluated against its asymmetry quotient, the ratio of long-term reward to short-term friction. Over time, minor, consistent behaviors produce exponential divergence from the reactive crowd. Behavioral friction is minimized through pre-commitment and environment design. The silent winners shape their surroundings to reduce distraction and decision fatigue. Financial systems are automated, social exposures curated, and optionality preserved. By removing low-leverage decisions from daily life, cognitive bandwidth is reserved for high-impact actions, accelerating both asset velocity and income leverage. Most people remain stuck in micro-decisions, slowly eroding compounding potential without realizing it. Finally, silent winners integrate exponential compounding into identity itself. Money, skills, relationships, and opportunity are no longer external objects. They are vectors of self-expression. Decision-making aligns perfectly with structural advantage. Behavior becomes automatic, consistent, and resistant to emotional disruption. Over decades, this identity alignment ensures that acceleration is not temporary. It is self-sustaining. The compounding effect of identity itself now amplifies capital, skill, and influence simultaneously, creating outcomes that appear effortless yet are meticulously engineered. Micro cliffhanger. In Section 8, Wealth Redefinition, we will expand the lens beyond capital, income, and assets. You'll see how silent winners redefine wealth, freedom, and power, transforming the concept of success itself into a system that aligns with identity, velocity, and compounding. The visible world has no idea how differently they measure value. By now, you understand the invisible architecture, compounding engines, acceleration systems, and identity evolution that drive silent winners. But true mastery requires redefining wealth itself, moving beyond income to assets or status into a system that aligns with freedom, influence, and structural advantage. Silent winners measure value differently, and this redefinition is what separates them from everyone chasing conventional markers of success. The first paradigm shift is wealth beyond income. Most people equate high earnings with high wealth, yet income is transient. It disappears if you stop working. Silent winners think in terms of capital velocity and compounding potential. Wealth is not the paycheck. It is the invisible system that converts effort, capital, and skill into exponential advantage. Income is a lever, not a measure. Assets are the amplifiers, and thresholds are the accelerators. The crowd focuses on numbers. Silent winners focus on mechanics. Next is freedom beyond consumption. In conventional thinking ties freedom to the ability to spend, luxury cars, vacations, or conspicuous lifestyles. Silent winners invert this notion. Freedom is the capacity to act without friction. Time, mental bandwidth, and optionality are far more valuable than transient luxuries. Every structural choice, capital allocation, buffers, skill stacking, is designed to maximize actionable freedom. Consumption becomes a tool, not a trap, and every asset contributes to operational independence. Power beyond status is the third principle. Society equates influence with visibility, titles, social media, or recognition. Silent winners redefine power as control over leverage points, access to capital, optionality, timing, and skill networks. Influence is a byproduct of system mastery, not a goal. Status signals often distract from velocity. Power arises from structural advantage applied consistently. This invisible power is durable and multiplies compounding effect across income, assets, and identity. Silent winners also redefine risk perception. They see risk not as a fear to be avoided, but as asymmetry to be exploited. Traditional metrics of safe or dangerous fail to capture structural opportunity. By reframing risk, silent winners convert volatility, mispricing, and social panic into compounding advantage. The crowd reacts emotionally. Silent winners act strategically, turning systemic uncertainty into structural certainty. A deeper layer is legacy as leverage. Wealth is no longer measured by what you own today, but by the structures you create that endure and multiply beyond your direct effort. Businesses, investments, networks, and skill systems compound across time and people. Silent winners engineer this invisible scaffolding, capital that continues to generate velocity, influence, and optionality long after direct labor ceases. The system becomes self-sustaining. Finally, metrics of success are recalibrated. Silent winners track alignment with their invisible system. Capital thresholds, compounding velocity, optionality, skill stacking, and identity consistency. Traditional markers, salary, possessions, appearances, are irrelevant unless they reinforce structural advantage. By redefining wealth in systemic terms, they remove distraction, preserve compounding momentum, and operate on a horizon measured in decades rather than months. Micro cliffhanger. In Section 8, Part 2, we will explore how this redefinition of wealth manifests in daily decision-making, investment choices, and long-term strategy. You'll see how silent winners measure freedom, leverage, and influence in ways the crowd never notices, enabling exponential advantage without conspicuous effort or visibility. Silent winners operationalize their redefined wealth through daily decisions, investment priorities, and systemic thinking. Every choice, no matter how small, is measured against long-term alignment with velocity, optionality, and compounding advantage. Unlike the majority, who react to immediate gratification or social pressure, silent winners act with decades in mind. Decision frameworks. Every expenditure, investment, or commitment is evaluated through three lenses: alignment with structural advantage. Does this action enhance compounding, thresholds, or optionality? Asymmetric potential. Does this choice generate disproportionate output relative to input? Behavioral friction. Minimization. Does this preserve mental bandwidth, reduce distraction, or protect momentum? Decisions that fail any lens are deprioritized, deferred, or eliminated. This creates a silent compounding effect. Small choices, repeated consistently, accumulate into enormous structural advantage. The crowd, distracted by visibility or social conformity, unknowingly erodes compounding potential through reactive, misaligned actions. Investments, aligned with redefined wealth assets, are acquired not for status, but for velocity and optionality. So silent winners layer capital across vehicles that amplify compounding. High liquidity reserves for immediate opportunity as capture. Growth-focused instruments for long-term exponential accumulation. Income-generating real estate and private deals for structural leverage. Skill-enhancing investments that increase decision-making power and access. Each allocation is evaluated for both financial and identity alignment, ensuring that every asset reinforces structural advantage rather than emotional or social satisfaction. Most investors focus on yield or recognition. Silent winners focus on leverage, asymmetry, and thresholds. Freedom and influence in action. Redefined freedom manifests as the ability to act decisively without friction. Optionality, liquidity, and skill create the operational flexibility to capitalize on asymmetric opportunities. Influence is exercised quietly. The silent winners network, knowledge, and access allow them to move markets, shape outcomes, and extract opportunity without visibility or approval. Status is irrelevant. Structural leverage is everything. Risk reframed. By redefining risk as asymmetry rather than fear, silent winners navigate uncertainty with precision. Volatility becomes a tool, market inefficiency a playground, and social panic a signal to deploy capital or skills. Whereas the crowd reacts emotionally and loses compounding momentum, silent winners act deliberately, capturing outsized gains while maintaining structural integrity. Legacy as a structural multiplier. True wealth extends beyond the individual. Businesses, investments, networks, and skill systems compound across people and time. Silent winners engineer structures that endure, creating leverage that transcends personal effort. The compounding effect of legacy amplifies influence, freedom, and optionality, producing outcomes that appear disproportionate but are the natural result of systemic alignment. The invisible principle here is sustained asymmetry. By redefining wealth in structural terms, silent winners operate in a different dimension than the crowd. They are not merely accumulating assets, they are cultivating a self-reinforcing system that multiplies compounding advantage continuously, quietly, and invisibly. Micro cliffhanger. In the final section, Challenge plus Ascension. Close, we will synthesize everything into a direct, actionable challenge. You'll see how to internalize these systems, how align your identity, and execute with silent precision to generate exponential advantage over decades. The crowd will remain unaware, but your trajectory will become unstoppable. Everything you've seen so far, the invisible architecture, compounding engines, acceleration systems, identity evolution, and wealth redefinition, culminates here. Now it's no longer theory, it's a call to action, a challenge to internalize, execute, and ascend beyond the reactive crowd. Silent winners do not wait for permission. They act with structural clarity and unwavering commitment. Here's the first imperative: align your identity with compounding advantage today. Every decision, every allocation of capital, and every investment of time must reinforce the system you are building. If you continue to operate with old habits, impulsive reactions, or social-driven behaviors, all the knowledge you've absorbed will remain latent, invisible, and ineffective. Identity must become the engine that drives action consistently. Second, activate your dual engines of income and assets simultaneously. Deploy capital strategically, maintain optionality, and leverage controlled risk. Every threshold crossed accelerates velocity. Every avoided behavioral leakage preserves it. Timing is your invisible ally. Move too early, gains are diluted. Move too late, opportunities vanish. Silent winners synchronize action with structural rhythm. Third, redefine your metrics of wealth, freedom, and power. Stop measuring success by salary, possessions, or applause. Evaluate every choice for structural leverage, compounding potential, and long-term alignment. Income, assets, and skill are not the endpoint. They are the instruments that amplify freedom, influence, and exponential growth. Fourth, embrace the compounding feedback loop of identity and system. Every aligned decision reinforces your identity. Every misalignment produces subtle but compounding friction. Silent winners monitor, adjust, and pre-commit to alignment relentlessly. The system becomes self-sustaining. Identity drives action. Action reinforces structure, and structure multiplies advantage. Here is your direct challenge. Begin today. Audit your capital, your decisions, your network, and your habits. Identify areas where misalignment, behavioral friction, or short-term pressures erode compounding potential. Implement buffers, optionality, and threshold strategies. Internalize delayed gratification. Detach from status and social validation. Begin building the invisible, structural engine that will carry you decades beyond the reactive majority. Visualize your trajectory. Years from now, while most are still reacting, you are silently compounding advantage, building thresholds, leveraging skills, and moving through asymmetry with structural precision. Freedom, influence, and wealth are no longer abstract. They are the natural outcome of aligned identity, velocity, and system mastery. One unforgettable closing line. The world will never see your advantage because it is invisible, but your future self will inherit a life the world cannot comprehend.